Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 11th of January 2021 and we're publishing part 2 of US dollar decline and debt clock, where we shall take a more in-depth look at the US debt clock, public spending and its likely impact on the US dollar and gold and silver prices. So let's take a look. In part 1, which was published earlier today, we looked at the US dollar performance compared with a basket of other currencies over the past year and at the US dollar index over the past 5 years, and discovered a gradual but definitive decline in the US dollar value. We then briefly touched on the US debt clock, which we shall cover in more depth now, but we have placed a link to the first video in the description box below, plus the video we produced yesterday, episode 6 of our Bitcoin versus Gold series. Okay, we can now see a steady but discernible decline in the value of the US dollar against major global currencies. This is not some major collapse or even something to panic over, but it is something which does bode well for the underlying price of precious metals in years to come. Now, we should also, however, take a careful look at the US national debt clock, which covers the outstanding debt owed by the federal government. Now, 2/3 of the clock shows the public debt by way of treasury bills, notes and bonds, and this covers individuals, businesses and foreign governments. You see, it's interesting to note that when Donald Trump became president in 2017, the US debt clock stood at $19.9 trillion. 4 years later, that is today, it stands at $27.7 trillion, up almost $8 trillion in just 4 years. Now, under Obama, we saw the debt clock rise $9 trillion over 8 years, something Trump rightly criticized him for, but the Democrats argued that the US was coming out of the worst recession in living memory, and therefore that debt had to be incurred. Well, we ask, now that Joe Biden will be inaugurated on the 20th of January, and the US economy is in a COVID pandemic-induced recession, it's only fair to ask, is he going to spend his way out as did Obama, and frankly, as has Donald Trump? And if so, where will the debt clock reach then? Even if Biden only increases the debt by as much as Trump has done, we shall be looking at a national debt of around $36 trillion in 4 years' time. And if he spends more, the debt will indeed then be even higher. All of this will have an impact on the US dollar and therefore gold and silver prices. So what are we saying? The dollar is not going to collapse overnight, but it is likely to weaken relatively to other currencies over the short to medium term. And this is why we have said for some time now that the 2020s will be the decade for precious metal prices. Acknowledging the fact, of course, that the value of the dollar is not the only factor that affects those prices. Now, in addition to this, there are those who also argue that the current debt is not really $27 or $28 trillion, but considerably more. And a site called truthinaccounting.org argue that the figure really is 5 times higher. So let's take a quick look at what they have to say. It's quite interesting, we think. Okay, so this is the truthinaccounting.org website. And as you can see, they've published at the top here the US published national debt figure, which as you can see is going up by the second, $27,697 billion. But their claim is that the real debt is $138 trillion. Some 5 to 6 times more. And they're claiming that each taxpayer's share of that debt is $893,000. Let's just take a quick look at their argument. US published national debt consists of debt held by the public, intragovernmental holdings, including debt held by Social Security and Medicare trust funds, does not include total unfunded Social Security and Medicare promises. This amount is updated periodically to coincide with the debt to the penny. The truth represents assets and liabilities reported in the financial report of the US government and unfunded Social Security and Medicare promises based on assumptions. And this is how they calculate the truth. They say that the assets that the federal government owns is just shy of $4 trillion. But what it owes, unfunded Medicare promises, $57 trillion, unfunded Social Security promises, $44 trillion, publicly held debt, $20 trillion, pension and retiree healthcare liabilities, $8 trillion, and other liabilities, $1.6 trillion, coming to a total of $131.69 trillion. And they say, our true national debt calculation is estimated using data provided by the US Treasury Department and Social Security and Medicare trustees. Each year we update our calculation to include the assets and liabilities reported in the most recently issued financial report of the US government as of the federal fiscal year end September 30. We also update the true national debt calculation when the Social Security and Medicare trustee reports, which include amounts as of January 1st, are issued. The trustees' reports include a calculation of the present value of the benefits these programs will receive over the next 75 years, offset by the receipts directed to these programs for that time period. In our calculations, we do not take into account receipts or benefits that will be received from and paid to future participants. In addition to using current law to calculate the unfunded promises, the Medicare actuaries also estimate the amounts using the illustrative alternative scenario. We use the IAS in our estimates because it incorporates more realistic assumptions about the future payments to Medicare physicians. The estimated deterioration in the true national debt is based upon historical trends. And they're basically saying assets minus bills is minus 128 trillion. Estimated deterioration to date minus 10 trillion. The truth minus 138 trillion. Let's go back to our discussion. Now, for our purposes, truthfully, this is moving into the financial weeds. And frankly, we cannot verify whether their assessment is totally accurate. But we do get where they're coming from. They are including forward liabilities in addition to existing liabilities. That issue can be debated as to its efficacy, but what is important is that we can see that the US debt clock figure is perhaps the best case scenario rather than being a worst case scenario. So where does this leave us in terms of the value of the US dollar and then gold and silver prices? Well, first, let us show you what is not going to happen, which the pumpers and YouTube clickbaiters would love you to believe. So, if we go to usdebtclock.org, we can see the current US national debt at 27 trillion 778 billion 487 million 700 and it's going up 800 900,000 etc etc, and the equivalent of $83,950 debt per citizen and $222,000 debt per taxpayer. It's quite alarming when you see this figure moving. And then as we move to the right, we can see the US federal tax revenue, which essentially is 3,452,284,000,000, etc., etc., and an average revenue per citizen of $10,000. A frightening situation to behold. Now, many of the pumpers and many, I have to admit, YouTube clickbaiters will have you believe that these figures here are what gold and silver is eventually going to return to. And I'm referring here to this figure. Dollar to silver ratio is now the equivalent of $4,693 an ounce, and the dollar to gold ratio $33,799 per ounce. If this were to be achieved, the underlying value of the dollar would be so low that your loaf of bread would cost you hundreds and hundreds of dollars. So before we actually get to this sort of scenario, there will undoubtedly be, at some stage, some form of economic reset. So we can ignore, quite frankly, these figures, or accept the figures, but understand that the value of the dollar would be infinitesimally small, and therefore the price of everything, not just gold and silver, but everything, would be enormously higher than they are today. What is important for us all to bear in mind is the speed in which the debt clock is rising, proportionate also to the speed and extent other country debt clocks or their equivalents are rising too. On that basis, if it's greater, then this will of course have major implications over time for the underlying value of the US dollar currency. What you should really discount is the vast profit some of the pumpers and YouTube clickbaiters tell you that gold and silver will provide you with, and state often that 1 ounce of gold will buy you a house. Well, perhaps a really nice doll's house. Yes, there will be room for capital appreciation, and yes, we are of the opinion that there will be price increases in both gold and silver during this decade, and we've already provided our rather bullish forecasts, we felt, for gold and silver prices for 2021. And more than likely, these prices will continue to rise with some oscillations in between, up to and perhaps including the mid part of this decade. But really, one should regard one's precious metal holdings as an asset that will allow one's wealth from being eroded by governments that cannot help themselves but to spend, spend, spend. There's little doubt in our minds that gold and silver will rise predominantly because of a continuing decline in the US dollar over time. This won't always, though, be witnessed as a continuing straight line downwards, but a gradual decline. However, everything is relative, and as other countries face crises of their own, in the future, the dollar may very well improve against those countries' currencies. We're the first to admit that the debt clock can go on much further and higher than many people have thought that it would do so. Our comments a few years ago was that we would start getting somewhat concerned when the debt clock exceeded $30 trillion. And that was at a time when the debt was close to 21 trillion. And we were told by many people on this channel we didn't know what we were talking about, as the dollar will have collapsed once $25 trillion was reached. Well, here we are at nearly 28, and yes, the US dollar is weaker, but certainly nowhere near a collapse. So as usual, our guidance is simply watch these ever-moving characteristics. Do not panic, do not be unduly influenced by people with agendas, and just gradually protect yourselves financially within the means in which you are able. But also, please, please, please bear in mind, diversity of assets has always served today's and yesterday's multimillionaires and billionaires over decades, if not centuries. So why should it be any different for us? Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, and not forgetting to place any comments that you may have in relation to what we've covered today below, and not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.